Hey guys, welcome back to the channel. The Bank of Canada just made a major rate cut, 50 basis points. We're going to talk about what this means for the Vancouver real estate market. We're going to talk about some other things that are affecting small businesses and homeowners in BC. Then we're going to wrap it up and talk about what we can expect in 2025. Real quick, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you and you wanted to chat with me about your real estate situation one-on-one, you can book me for a free call in the Calendly link below and on screen, and subscribe to this channel so you don't miss a future video. All right, guys, I hope you had a wonderful week. We're gonna jump right into it. 50 basis point cut by the Bank of Canada. What does this mean for the market? Let's talk a little bit about expectations. What were economists expecting heading into this rate cut? Now, most economists, after seeing the latest jobs report, were expecting a larger rate cut of 50 basis points. Our key rate now sits at 3.25%. From an annual perspective, something that I found quite interesting is of all the major banks, there was only one major bank, I believe it was National Bank, that predicted that rates would be this low at 3.25% by the end of 2024. CIBC, TD, all of them were suggesting that rates would be at 3.5% or above. So what this tells you is all of the major banks out there were not expecting the economy to be performing as poorly as it has been. So, when rates get cut, it's interesting because you'll find realtors everywhere, excited and celebrating and acting like it's positive news. And the reality is the fact that we had two back-to-back 50 basis point cuts, that's not a good signal that the economy is performing anywhere near where it should. Now, we had, again, back-to-back 50 basis point cuts. We're at 3.25%. Heading into January 29th, I believe, is the next set of cuts. The message from the Bank of Canada was very much that, future rate cuts, if they are to occur, are going to be more gradual. So it sounds as if, if the data is pushing towards a rate cut happening in January, it's not going to be another large 50 basis point cut. But depending on which economists you talk to, most are expecting a cut in January and potentially even further cuts beyond then. There's a lot of unknowns in the market right now. One of the big unknowns when it comes to the Canadian economy is you've probably heard about the Trump tariffs when he takes office in the middle of January. He may be imposing tariffs, and that was asked to Tiff Macklem in terms of, did that have any effect on his decision making today and what that might do for the economy moving forward. And he said, look, it's a great risk to the Canadian economy. Cannot make decisions based on that. But I think part of the reason we saw a 50 basis point cut is when it comes to business investment in Canada, if you are a business that could get affected by these tariffs, very tough for you to make investment decisions right now. Business investment essentially screeches to a halt while you wait and see what happens. And so a 50 basis point cut at the last meeting, 50 basis point cut again. This is to increase that spending. The other thing they mentioned on the housing front, which I've been talking about on this channel for a bit, is that they saw housing activity pick up over the last couple of months, but they did not see prices increase, surprisingly. And what I've been noticing at the ground level here as a real estate agent is that sellers were finally starting to reduce their prices over the last 4 or 5 months. Reduce, slightly, and all of a sudden we hit a point where buyers felt it more palatable to get back into the market because prices had come down enough. And I think the reason for this is a lot of sellers did not really have a scope of what their next place would be. What's the next plan after selling their place? So they stick a sign in the yard, they ask a high price. They don't know where they're going to go anyway, so they might as well ask that high price. But what I'm noticing now, especially over the last 5 weeks, is people that have maybe been stuck in their homes, they've really been enjoying low mortgage rates. They are now starting to get more motivated to actually put plans in action for 2025. So a lot of these upsizers, a lot of downsizers, they're kind of coming out of the woodwork now and saying, okay, rates are getting to a point where if we're going to make this move, it's going to happen over the next 6 months. And so when that happens, they're a lot more flexible in terms of their sale price because they actually have a plan for what they're going to do next. Now, circling back on the rates really quick, what does this actually mean for you with a 50 basis point cut? If you are on a fixed rate, it doesn't mean anything at all. You're on your fixed rate. But if you are on a variable rate, you will see a payment decrease if you are on an adjustable payment with Scotia. And how it amounts to is basically around $30 per month for every $100,000 of mortgage outstanding. Now, the way the other lenders treat their variable rates is the payment does not adjust. Just more of your payment is going to go towards principal. So that will affect your amortization term. It'll shrink it down. When it comes to fixed rates, if you're originating a new mortgage, for instance, fixed rates, I've talked about it before, they are based on an expectation. They are forward looking. So if the bank or if economists were expecting a 50 basis point cut, whatever it might be, oftentimes that's priced into the fixed rates. Now, having said that, they are closely aligned with bond yields. And as we've seen bond yields come down a little bit, if we see some prolonged price action in that regard, then we will see fixed rates come down a little bit as well. But I think the conversation now becomes very heavily surrounding, okay, do I go with a variable rate now? Am I expecting future cuts in the horizon, or do I continue with a fixed rate? The gap has now shrunk, so I think a lot of buyers, at least in my world, one of their big questions for me is, should I go the variable route? Should I go with a fixed rate? Comes down to risk tolerance every time, so there's no blanket statement to be made. But talk to a mortgage broker, talk to a realtor you trust to determine which is the right path for you. So I mentioned earlier on how business investment, it's a real threat that we're going to see a major decline happen with business investment over the next several months. Interesting things happening here in BC when it comes to business. We'll talk federally. We have the GST holiday kicking in. By the time you watch this video, I think it'll be the following day, a 2-month GST holiday on select items which the federal government is rolling out, of course across the country. It's an interesting time for businesses and small businesses. I can tell you, as I used to own quick service restaurant businesses. I was a franchisee for a large national chain, and what I can tell you is when we had moments where we needed to reprogram the tills, we had changes in pricing and changes in taxation rates. It was a big burden on our stores. A lot of times you couldn't do that programming on your own. You had to bring someone from a third-party IT provider coming in to make these changes. You had to train the staff, whatever it might have been. It was a big cost and a big burden to the businesses. And I've been looking at this GST holiday, not extremely in depth, but I've been seeing a lot of the fine print that comes along with this GST holiday. So things such as certain toys are exempt, but if there's any sort of marketing towards an adult for that toy, then that's not exempt. So many products have, huge amounts of fine print for these retailers, for these businesses to adhere to when it comes to the GST holiday. This is going to cost businesses across Canada thousands of dollars to implement for 2 months. I just don't see the benefit of this, keeping in mind that, the $250 checks that will come out next year, it's coming out of all of our pockets, right? So you're putting all of this pressure on businesses at their busiest time of the year. The last time you want to deal with, POS and till changes and understanding fine prints is right now, if you're in retail. If you're in restaurants as well, restaurants get busier. Everything gets busier around the holiday season. And to kind of throw this on, at the busiest week for a lot of these retailers, I think is insane. When we talk about cost to businesses, a bit of a microcosm here, the Small Business Association for BC just filed for bankruptcy last week. And so, symbolically, when you look at it, the support organization for small businesses unable to keep their head above water. What does that tell you about small businesses themselves in BC? not a promising outlook. And the interesting thing about the Small Business Association of BC, funded by the federal government, by the provincial government, there's a member of the provincial government on its board, just 1 month ago received funding of 2.7 million taxpayer dollars. And now, as of last week, they have filed for bankruptcy. So, it's interesting. Where did the money go? Where did the 2.7 million go? But just again, the symbolism behind that support organization that's there to offer training and support and networking events and courses and all of these sort of things to help small business owners, that's now going under. And it just goes to show you the state of small business and business in this province. So it's going to be, interesting to see what sort of support this government is going to offer for these businesses, as in this current moment they frantically work at reprogramming their tills and understanding the fine print so they can give the tiniest of discounts to retailers in a feel-good type of a policy that's not really going to have a lot of effect, but it is going to affect our deficit, which seems to be ballooning. We're going to learn a lot more on the federal deficit over the next couple of weeks. And let's not forget that this GST holiday, it's a $6 billion cost to taxpayers, not to mention the strain that it's going to be on these business owners. So as I wrap up the video, I want to talk very quickly about what I expect to see in 2025 in the real estate market. Number one, I expect sales to be dominated by end user type of purchases. So that would be first-time home buyers, as I mentioned, downsizers, upsizers, families coming together. I'm speaking with quite a few families that are looking for larger places, perhaps selling 1 or 2 homes, moving into something larger. So that's, the end user type of a product, not investor driven. On the flip side, doesn't get talked about a lot. It's not an exciting topic by any stretch, but there's a lot more people going through separations and divorces right now. So just, kind of like how you have these families coming together, selling a couple homes, moving into one larger one, you're having a lot of instances, at least in my world. Last year, there was a period of time where my entire funnel, my entire book of business was either a newlywed or newly separated. That's pretty much everything that I was working on. And so when you have, the divorces and the separations unfortunately happening, you generally have people selling 1 home and looking for 2. So it's just an interesting, microcosm of the types of moves that we're going to see in this real estate market. I think the first half gets dominated by this end user type of product. I think in the second half of the year, though, if rates do continue to come down, like a lot of economists are expecting, investor appetite is never too far away in Vancouver real estate. And really the government, they really need to focus on, creating an environment where builders, continue to build. And obviously a big chunk of that is through the interest rate, and Bank of Canada actually, using that interest rate to be able to incentivize. You can't keep throwing, billions of dollars at these developers saying build rental, and actually, have it come to fruition when all of the costs, the construction costs, the labor costs, all of that increases over time. So again, I think first half of 2025, end user driven. Second half, perhaps some more investor type of purchases happening. If you are a buyer, you may want to get ahead of the spring market. Again, we had a 50 basis point cut, perhaps another cut at the end of January. So if you want to kind of get ahead of it and maybe not compete as hard, might be a good idea to get your ducks in a row now. Jump out the gate in January. Sellers, I always say, keep in mind that this rate cut that just happened this last week, that doesn't automatically mean your home price is worth more today. If you price yourself effectively, though, there are a pool of buyers out there that are shopping, and you could take advantage of the market. So there you have it, guys. I hope you enjoyed this week's video. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can also learn from it. And if you enjoy weekly real estate content, subscribe to this channel so you don't miss a future video. And lastly, again, if you're in the Vancouver area or the Fraser Valley, you want to chat with me one-on-one about your real estate situation, you can book me for a free call, or you can just give me a call. Send me a text, shoot me an email, whatever's easiest for you. My info's all in the description box, but I want to thank you again for watching this week's video, and I look forward to seeing you next week.